Hi, I'm Brian at AutoShopTeacher.com, and this introductory video is about managing by the numbers. I first made this presentation when Ratchet and Wrench published an article back in 2018, and in there they had a survey from 2017 where they had surveyed shop owners about managing by the numbers and KPIs, key performance indicators. So I'm going to give you an idea here, or maybe a way to think about key performance indicators that you haven't considered previously. We're going to use a workshop comparison. So in your shop, hopefully you're using the 3 C's. I know it originated in dealerships years ago for warranty purposes, so that the manufacturer would pay the dealership back for repairs performed under. But it's become very common, and I hope you're using the 3 C's in your repair order process. So comparing KPIs or relating them to the 3 C's could go along kind of something like this here, where the 3 C's, we have the complaint, the cause, and the correction, right? It's a common way to document info on repair orders. So a repair order example would be a complaint. Well, pretty much other than maintenance, everything falls into 2 categories. Something's happening that shouldn't be, or something isn't happening that should, right? There's a rattle noise coming from under the hood. That shouldn't be happening. Or I push the button on the radio doesn't come on. Something that should be happening but doesn't, right? Then as a technician, they get that vehicle and that repair order, they read what's been listed as the complaint, and they go in and determine what the diagnosis is, what needs to be done to correct this condition. And that's where, as a shop consultant, a coach and trainer, where you could have me come in alongside and kind of be, if you will, the diagnostic expert in your business if you're having troubles in certain areas. I'd be happy to help. And then ultimately the technician determines what correction needs to be performed. They document that, get that work order, that repair order back into the shop or back into the office, and estimates made, customers contacted, right? So relating that to your operating of your business, okay, we could kind of look at it this way. The 3 C's concept can be applied to the business. So possible complaint could be, I'm not making any money, right? Or maybe you are making money and there's something else that is your complaint about your business. This doesn't need to be aired. This is something that's private, that's shared under confidentiality with someone like me as your coach. And we start figuring out, okay, well, what's the cause? And if profit is the issue, it's highly likely that you're not tracking key performance indicators, or you're not reacting to them, one of the two, okay? So here we go. We start with the acronym SOUP, as we call it, Key Performance Indicators, KPIs, P&L, Profit and Loss Statement, CODB, that's your cost of doing business, okay, your cost to operate, and then a break-even analysis. That is arrived with a combination of data from your point of sale and your bookkeeping, and you can get into figuring out what is your break-even analysis, and we're going to look at that more here in a minute. So from that survey that Ratchet and Wrench did in 2017, that they published in March of 2018, I believe it was, there was 32%, so basically a third of shop owners that were surveyed. Okay, so Ratchet and Wrench was able to contact them, so they were known to be in business and answer the survey. And a third of shop owners are not tracking key performance indicators. And here's 3 of the reasons that they gave that really stand out to me. The first one here, I'm not sure what to track and how to do so. That one, in my world, and because I've been doing this for so long, it's just kind of a startling answer to me. Not sure what to track. Okay, but then how to do so, that part of it I understand, because if you haven't been coached or you didn't go to business school, you might not know how to track those numbers. You might be able to look them up, but you don't know how to react to them or to use them. This one down here, we don't have the time to do this. I think that's probably the most lame duck answer right there. Because if that shop owner is there 8 hours, 9, 10, maybe even more than that, and they can't spend 10 minutes, because once you get dialed in on this, it's literally a 10-minute task, and don't have time to do this. So that's literally what I hear from that statement is I'm so busy spinning my wheels that I don't want to actually make money in my business. I want to stay a hobby shop. The last one here, haven't been able to agree on key indicators and methods of tracking. Can't agree on the key indicators. There's got to be hundreds, at least 100 automotive consultant and trainers out there like myself that, and trade magazines, and I mean, this has been going on for a long time, even before computerized point-of-sale software, computer repair orders. This is a very known thing to do, okay? None of what I'm sharing with you in this introductory video is new information, if you will. It might be new to you, and I'd love to help work with you and train you on how to start using these numbers. But that, again, kind of another lame duck answer. Haven't been able to agree on key indicators or a method of tracking. So the excuse is given. You've already heard me read those. In summary, putting it in my words, they don't know what or how or no time. That's kind of what it boils down to. That's, the first step to learning would be discovering that you need to know something that you've never studied previously. So using that on a positive spin, if that is you and you're now recognizing that you own a shop or manage a shop, and a lot of this is kind of a little bit foreign to you, almost another language, like, oh, only bookkeepers do that kind of stuff. It's not hard. It's relatively easy to learn if you're willing to. And recognizing that you need to know about this key performance indicators would be the first step towards then getting some assistance and some training. So back to our acronym soup, right? The break-even analysis, cost of doing business, profit and loss, key performance indicators. The industry loves acronyms, right? So let's look at just, what do we have here? 5 examples of some KPIs. Car count, probably the easiest one there is to keep track of. At the end of the day, write down or make a note of how many repair orders you completed. Gross sales. Well, take that stack of repair orders and add up the bottom line for each of them and get that grand total. Those 2 numbers right there are important to track. They are a part of your KPIs, but those 2 numbers right there will not give you an indication of whether or not you're making money. You could do $100,000 in a day, but if it cost you $999,099 to earn that $100,000, you made $1, okay? And you maybe ran 100 cars through your shop or whatever it is. That doesn't mean you made any money. That doesn't mean you covered your cost of doing business. But you can start taking those 2 and then start getting your average repair order, right? So simple one to calculate. Take your total sales, divide it by your number of repair orders. Now you know how much you typically collect on your average repair order. We're still up we're not talking about profit yet at this point. This is how much you collected by the number of repair orders you processed. That is your average repair order. Then now we start getting into how we're going to find out what kind of profit we have. So we got labor margin and parts margin. I have another introductory video on my YouTube channel where I talk about parts margin and how to properly mark up parts. It's just an introductory, But if you're not marking up your parts, please go watch that short video and get in touch with me. But you notice I start here with labor margin. In GAAP accounting procedures, labor is on the profit and loss statement, but not calculated as a cost necessarily in your point of sale software. Some point of sale softwares do not count the labor against the profit. And you will, if you're just looking at that report and it's being calculated that way, you're not actually looking at your true profit, because on that repair order that you think that you maybe made 60% gross profit, if labor is not accounted for in there, it is a false indicator. It would be an incorrect key performance indicator. So you take your total cost of what it cost you to generate that labor and the total cost that you paid for the parts you installed, add those two together, and then subtract it from your gross sales, and then you could start actually determine what your actual gross profit, your total margin is, how much you actually made off of the labor that your shop generated and how much you made off of the parts you sold. Another KPI is effective labor rate. You may think that you're charging, let's say, $150 per hour for every hour that you work on somebody's vehicle, but you may be, in fact, I guarantee you're not actually doing that, even if that's the number you think you're starting with, and you are starting with. At some point, you're going to discount an oil change, or you're going to give your buddy Bob a break or whatever. And at the end of a given week, month, and so on, you need to actually know what your effective labor rate is. So you need to divide the total labor dollars by the amount of hours. This also gets a little bit tricky, because if you're in a state, or maybe just your method of payment for your technicians pays them to just be there, they're costing you and affecting your effective labor rate just by being present, okay? So you actually might need to take your total cost for that technician for the whole 8 hours or 40 hours for the week and divide that then into your dollars collected to actually find out what your effective labor rate is. 2/3 of shop owners out there are doing this every day, typically in the evening, at the end of the day, or they come in first thing in the morning and do it. If they're a shop owner that leaves earlier in the workday the day before, come in the morning while the coffee's dripping. They're running the numbers from the day before and getting these calculated so they can know the health of their business. And then they continue to do that weekly and monthly and so on. And that is how they manage their business, by the numbers. And they can actually, when you talk to them, they know exactly all of these data points, and they can retrieve them from a spreadsheet in a matter of seconds, probably even on their phone, okay? 1/3, though, right, 32% of shop owners, remember from the article, are not doing this. They are either just running their shop with a licked finger in the air and trying to figure out which way the wind's blowing. They're maybe just using the balance in their checking account. I met with a shop owner one time that as long as he deposited $1,500 a day, he knew he was good. And that worked for him, but he was never going to grow, and he was probably never going to take a vacation. Okay? So something to think about. So let's look at just a very generic, this is just a stock image off the internet of a profit and loss statement. This is not even for an automotive shop. But let's look at this real quick, right? We have our cost of goods sold. So for us, that would be the parts that we purchase. And they're obviously, whoever this is marking up their parts quite a bit, or their cost of goods sold. And they're generating $60,000 plus per month the first 4 months of the year. And then suddenly, what do we see here happen in month 5, in May? It drops by over $20,000, and it continues that for the next 3 months. Okay, we can see that their total operating costs sit every month at $31,460 and never changes. Very good indicator that this is not actually a profit and loss statement for a real shop. Again, it's just a stock image example. Okay, so what happened in month of May, month 5, right? Well, obviously, as I already pointed out, sales dropped tremendously, income dropped tremendously, okay? Somehow the gross margin stayed exactly the same, so it wasn't like they started giving things away. So right here, top line, what happened? Well, sales dramatically dropped off, okay? What should have happened in June? If we look over here at column 6 for June, we see it continued on and ended up being another $44,000 month when all the previous ones were over $67,000. What should have happened in June? I'm asking you to think about that, okay? Well, one thing I would suggest, just to kind of throw a freebie out there, would be we look over here at marketing expenses. It's the third item under expenses. 1147, 1147, month 5, 1147, month 6, 1147. How would this shop owner, if this was a profit and loss statement for a shop, how would they have known that they needed to react? And in my opinion, what they should have done was we should have seen this marketing expenses at least double in June, because the problem here is sales. Sales dramatically dropped off, right? If we were actually monitoring all of our KPIs, we could then also look at our car count. We could look at our average repair order. We would already have been looking at them each day and each week before we even arrived at June. We could have been reacting in the 4th week of May and already giving June a shot in the arm if we were tracking those KPIs. But that's only going to happen if the shop owner or manager is tracking those key performance indicators and watching their profit and loss statement weekly. Profit and loss statement, just to add, really doesn't have to be watched every day. When I had my shop, I had a contract bookkeeper, so my profit and loss statement only got updated once a week. But by extracting data from my point of sale software into a spreadsheet, I was able to see every day, and by the end of the week, before the bookkeeper had even come, I already knew where I was for the week. I just need to see what my overhead expenses were on a given week and month and so on. Again, so to keep a hold on that cost of doing business. Cost of doing business is the minimum gross profit needed to stay open. Okay, I just mentioned that at the end of the last slide. So we come down here to our total operating costs, and we can see this business for this imaginary business's profit and loss statement. Every month it's $31,460. So we can round that off to $32,000. But just pointing out that until they make $31,460 in profit, not sales, but profit, this is not a business. This is either a charity or a hobby shop, okay? So let's take that and kind of just do kind of the most simplest type of analysis. We're going to round that off and say it's just $32,000, right? Because the cost of doing business was $31,460. So some made-up key performance indicators. Their average repair order gross profit is $320. That's after they've paid for the labor and the parts. The amount left over is their true repair order gross profit. So we're going to, for ease of math, we're going to say they typically make $320 per repair order. So easy math, how many average repair orders do you need to finish this month to make a profit? I underline that because that's the curveball in the question. Okay. Again, easy math, we divide our 320 into 32,000, but your answer should have not been 100 because you need to have opened and completed 101 average repair orders before you're making any profit. That profit is what allows for expansion. That profit is what allows for training. That profit gets new tools, paint on the building, whatever is needed. Goes into a savings account for vacations. Maybe adds benefits to you and your employees. Profit, okay? So a little joke here at the bottom. What instead if they'd had only 50 repair orders but averaged $1,000 gross profit per repair order? Well, if their expenses didn't change, that'd probably be a really nice month, okay? It's called a break-even analysis. Just remember, that's to get to your even point. You've now paid for being open for that week, or that day, that week, that month. You have to surpass it in order to get into profit. If you have too large of a cost of doing business, it's going to prevent you from being able to beat your break-even analysis. That's where I can help you examine things in your profit and loss statement to determine, are you maybe paying for things on a fixed monthly expense that you don't really need? You know, do you have a subscription to whatever, one of the online services or information services that you really only use that program once or twice a year, and you could have just paid, $5 for one-time access, and instead you're paying X amount of dollars per month for it to just not be a utilized tool? Things like that can be looked into, just as one small example. So obviously a profit and loss with more expenses than income, that keeps you broke, right? You're not going to beat that break-even analysis. If you don't even know key performance indicators or you're tracking them, then none of this is going to be happening in your business. You don't know what your break-even is. You don't know your average repair order, whatever it might be. Again, get in touch with me. I'd be happy to help. If there's no bottom line profit, ask yourself why you're in business. And again, kind of a joke, I bet it's not because you like long hours and no reward. So getting back to those 3 excuses that I pointed out earlier, why a third of shop owners, when surveyed in 2017, were not tracking KPIs. My answers to their excuses: well, the first one, I'm not sure what to track and how to do so. My response to that is you can learn it. You can work with someone like myself. It really doesn't take not even 6 months to learn, probably even half, maybe even a month or two. Really just in the first 2 or 3 lessons, you can already hit the ground running. And then once you have a few months under your belt, then you could possibly start using them to make adjustments in your business without even needing outside input from a coach. My response to the time one is you don't have the time because you're not making it. I know that's kind of cliche to say, but seriously, once you get dialed in on this, and the amount of time that pot of coffee took to drip that I mentioned earlier, by the time it was done and ready for that first cup of good morning, you could have already entered these numbers that were from the day before, and then start your day knowing exactly where you're at in that week and in that month and in your business. And the bottom one, haven't been able to agree on key indicators and method of tracking. Again, that still just kind of baffles me that a third of shop owners, or some of the third of shop owners that are not doing this, that was their answer. The rudimentary, meaning the basic key performance indicators, which I've already mentioned a lot of the main ones, they're already known. This has been being done in automotive shops across the country since long before there was, it was commonplace to have a automotive consultant or coach, long before computerized point of sale software, when things were still being handwritten. You could literally sit down and as a shop owner, even back then, 40, 50 years ago, and with a calculator and a pencil and a ledger, you could get this information off of your repair orders and into a document that you could then use to determine the health of your business. It's much easier in today's day and age thanks to computerized point-of-sale software and spreadsheets, where we could make a spreadsheet specific for your business. We then lock it down, and then each day and each week and each plugging in the numbers into the various boxes, and it generates the statistics for you, those data points you can use to react to. So remember this cover from the very first slide, and up here was a question that says, are you paying yourself enough? Okay, so I know it might depend upon your business structure, whether you're sole proprietor or whether you're a corporation or LLC, but still at some point you need to be paying yourself enough, unless you intentionally are running a hobby shop. And so my challenge to you would be to say, how can you pay yourself anything if you don't track your key performance indicators and react to your profit and loss statement trends? That's what I'm here for. I'm happy to help. My name is Brian Wampler, and I am AutoShopTeacher.com. Thanks for watching.